All right, who wants to go first? Was it all easy?
Good evening, Ken.
Good evening.
This is Isaac.
Yes, Isaac.
Yeah. In certain instances, when the change of direction occurs, you find that the candles just run like a train with no, without really coming back. Would you, using this method, would that be a trade that you would actually just let go if it doesn't retest?
Yes, that's a very good question, Isaac. In fact, I think you're you're what I call ahead of the curve. So ordinarily, using this particular strategy, exhaustion, and sometimes that actually happens in the market, that it just breaks and runs and runs and runs and runs and never comes back. So ordinarily, that will escape you using this particular strategy. However, once you master this strategy, there's an advanced level, this particular strategy, that allows you to take advantage of those trades that look like they ordinarily they will run away. But for you to be able to understand that advanced part, you have to get to know this exhaustion part, because it's like an extension of this first strategy. I don't know if I answered you, Isaac. So you're right. Ordinarily, it would look like it will run away, but there's a second part. You know, like if you go to school, you do elementary studies first, and then you go to advanced. So there's an advanced part to this that comes once you master this first strategy that now allows you. They don't happen all the time, but once in a while, if the market does that, there's a way you can still catch the trade. But you are absolutely correct. That's a very good question, but it will be answered in time once now everything falls in place for you, and once you get this, once you really get to understand, because even that particular one still is hinged. This is the foundation. So this builds into so many other things. So it is important that you first understand this one, and then you understand how you take care of different scenarios. If the let's say the market breaks and never retests, never comes back to tag in your trade.
I think I noticed that sometime in mid last week, whereby it just shot and went and never retraced.
Yeah, so sometimes that happens in the market. So there's a way you catch those ones.
You catch that.
Yes. But very good question, Isaac, and very good observation. Yeah, last week that actually happened. Next.
Ken, Vincent here.
Yes, Vincent.
The large break, I see there the example you are showing is where you have a rejection, and then you have a candle that fills it up, and then there's a third candle that goes up.
Yeah.
But I'm thinking that as the market moves, at any one time, you only have sight on one candle. So for example, you see the rejection, it's the only candle that you see.
Yes.
Then you see another candle filling it up. They're the only two that you see. So you can't quite tell that is a large break.
Correct.
So you are only able to tell it's a large break after the third long candle.
Yes.
Now, in terms of entry. I mean, the candle's already gone up there. How do you tell that you should, where you should actually enter? Because the third large candle is already right on top there.
Very good question, Vincent. So, and probably let me share the screen so that when I answer, we'll have a reference point. Yes, this is it, right?
Yeah.
Yes, so you are right in the sense that these candles form one after the other. So you'll be able to see this one first before you even know what will happen. So that's why for this particular strategy, you do not take any action until the candle closes. You know, sometimes because of the volatility of the market and the volume, the way the market comes, this candle itself can go all the way up here. So don't get excited and put your trade, wait, because it can go all the way here, but still push back all the way so that it becomes a rejection. So ordinarily what we do is you wait until this candle closes. Then you wait to see what happens next. You get? So that after this closes, this goes to the rejection. So then your action will be, you wait to see what happens next. This candle will start. So of course it will play. Eventually it will close here. Once it closes, you will observe. You'll observe the way this other candle is already giving. So already it has already given you an indication that it has already filled in this rejection. But because you're still observing it, you will notice that there's still a lot of momentum. In fact, in this particular case, you'll see it running, and dancing. So you wait again to see. You wait again to see what happens to it before you. So there's some level of patience that is required here. So depending on how it closes, because it can again come and, especially if this candle happened, let's say around news, we see a lot of movement. It can begin bullish, but ends up bearish, like really going down. So depending on how it closes, well, that gives you the confidence that this break. So because you combine all of them, imagine all of this way like in a straight line. If you had to draw all of them together, then now the three of them, 1, 2, 3, form, okay, now plus this one, form a very big break with some wick. So it will happen like this. In some instances where when there's a lot of momentum, it does not break it into these three candles. Sometimes it's just one candle that goes like this. So in this particular case, imagine you will still be able to amalgamate them and collect them. So in the end, it's still something that looks like this. Okay. So what happens is, you are right in the sense that you are only able to see this candle, but then the correct action to take is you wait and see what happens in the next hour. And then you wait and see what happens to the next hour. Then based on what you are seeing, then you decide to take action. So assume that it didn't form this one. Then this will just be characterized as a mid-size break. So then your entry will be different because it will not be this large break. It will only be these two. So this first one will be a rejection, and then the rejection will be filled by this second one. Okay.
Okay. All right, but sorry, so that in that case, where is the entry point?
Yes, now, this course, we have really rushed you. It is what we call, in ordinary ways, a crash course. So the entry is the most recent high. So if you look at this, it's as if there's a very big impasse, but the market keeps playing in between here. Like it keeps going up and down. It's like there's mini trends inside here, right? So then there's an advanced level, and I think that's what Coach will be introducing to you this coming Monday, the person who came up with this strategy has a lot more advanced courses and videos to show you on how to identify the most recent high. So don't worry, right now, it's a whole, let's say, topic or chapter in itself on identifying the most recent high, because that also dictates how, that is exactly where you're going to put your entry. But in simple terms, if I was to explain to you, this now is a new impulse, right? When it breaks, this becomes a new impulse. So the impulse, I think I can see, let me see if I can draw something. The impulse ends here and starts all the way down here. So this is our current impulse. So for you to be able to get it, you start to go back. If you are to go back, which is the highest point you come across before, let's say you come across this point. So assume that you're moving like this, you move like this is the current one, it ends here. So if you are to go back, it's like this market went like this. Actually, if I use this line graph, so it's like this. Then you come across this high point, which is this one, before, let's say, you come across this one or this one or this one. So then this part becomes your most recent high. But there's a lot more videos that helps you to identify those particular points. So the simplest answer for now for you is you go back. It's almost like you're back testing. You move back like this. And you say, which is the, if I was to draw this line like this, which is the highest point that I come across before I come across the current high, where the market was broken, which is right here. I don't know whether I've confused you or I've answered you. But right now, don't worry. If you don't get it right now, don't worry at all. Even as it took us weeks, actually, just to get that most recent high. Keep practicing and checking and watching. But the easiest is you move back. So you forget about this. So you disregard all candles that are part of this new impulse. This candle 1, 2, 3, 4, 5. So you can't put your trade in any of this because this is the current impulse. So your trade can only be placed in candles that form the previous impulse. So from this candle going all the way back here. But your point is to get the highest point that you come across first before you go back all the way to here. Are you together?
Okay. Okay.
But very good question. Very good question.
Hi, Ken.
Yes.
Hi, is it Kenya?
Ken. Meshach.
Yes. Okay, this is Meshach. Yes. Now, maybe if you could just go back to the same diagram. I'm just seeing like basically if the market changes direction, So I'm looking at this arrow pointing at the one that has something up there written entry 2 pips above most recent high. Okay. So just to check whether I've understood you correctly, even from previous explanations, like when the market changes, makes a break or a confident break. So usually at that point, you're supposed to once again determine the recent high. No, the recent high. Okay, because I'm seeing where this arrow is pointing. Is that a high?
Yeah, it's
I would
a high.
suppose that is a high where the arrow is pointing.
It's easier if you look at what I have drawn here. So assume, these candles are difficult to read, but look at my line graph. So it comes like this. The market, if you have to go back, it comes like this. Then it dances. It dances here. It's like there's a mini trend. You get?
Yes.
So these are highs. All these are highs. So you get
Yes,
to this high first before you get to this high, before you get to this high.
correct.
Because the market keeps moving, it goes down, goes up, goes down, goes up, goes down, goes up, like that.
So if you want to now because it has changed direction and you want to now set a new current high, so it will be the one down there.
Yeah, it will be here.
Yes, correct.
Yeah.
Okay. Yeah. So basically, when the market changes direction or makes a break, then you have to determine the highs and the lows if the low applies. Let's say
Yes.
if it is now going down.
Yeah. If
Okay.
you're selling,
Now what
if you're selling, you
pardon?
look at the
What
lows.
I want.
If you're buying, you look at the highs.
All right. So now what I just want you to explain to me again here is that part of the entry 2 pips above most recent high. So like in that, if you're using those candles, the 2 pips above most recent high would be which ones?
Yeah. So you know, you're familiar the way candles form in a chart. So there's usually
Yes.
the open price that it has opened with. Then there's
Yeah.
the highest price that that candle ever reached. And then there's the lowest price that candle ever reached and the price that it closed with. So when you say 2 pips above the highest, is basically the highest point of that candle. Each candle,
Okay.
there's usually 4 readings. If you are very keen.
Yes.
Yeah. So when you say 2 pips above, see the reading will be something like, if you are reading, like, let's say it's this particular pair, AUD USD, it will be
Yes.
something like 0.7265, right?
Yes.
0.72, let's say for example's sake, yeah, 0.7, assume this reading is 0.7265. So your entry,
Yes.
you will just add 2 pips to that 0.7265. In that case, it will be 0.7285. Do you understand? So you'll have
Yes.
added 2
Yes.
pips. And the reason why we do this is because of the data that you collect from backtesting. Ordinarily, from large breaks, if you just put your trade spot on at the highest point, ordinarily, most of the time, it might not be tagged in. So the 2 pips that
Yeah.
you're putting is just to aid it. You understand? So depending on the size of the break, if it is just a small break like this one, ordinarily, if you
Yes.
just place it here, chances are it will come, because it's the momentum that the market has gone with. Because if the market has gone all the way
Yes.
here, it may not have enough strength to come back all the way and tag you. You get?
Yes. So these 2 pips, so how do you, like, let's say if your one wants to, you take 1 pip, 2 pip, or 3 pips. So if it is 3 pips, what will that mean? And if it is just 1 pip that you have set?
All those are as a result of your backtesting. Some people put 3 pips. You know, your
Yes.
data that you do best when you're backtesting will
So if it's
determine.
a big break, will it be a small pip or a big pip?
That's what I'm saying.
If let's say it's a long break.
That's what I'm saying.
Yes.
You know, after this, you spend time in the market and you start noticing patterns,
Yes.
right? So you will notice
Yes.
that if I put 3 pips, maybe the trade usually comes and tags me, and maybe also takes my stop loss. So maybe on average,
Yeah.
just the correct size to put is just 2 pips. You understand?
Okay.
Yeah.
Okay.
So that is what is called personal preference. You see, like if
Okay.
you're driving a car, some people want to drive at 40 kilometers per hour, some people want to drive at 50. So all those things, including your stop loss, will
Yes.
be determined by your experience now that you've gotten in the market, which will dictate, you know, now those small minute details that you'll be putting in the market. But from this particular pair, from back testing, it's been shown that if you just move 2 or 3 pips above that highest point, you will most definitely be tagged in. Sometimes the market actually, you don't even need to put 2 pips above it, will just come and tag you in.
Okay.
Yeah. But very good question, Meshank. The best
Thank you.
thing to do to experience this is take time, study the charts. You see the way Isaac said he noticed this week that it broke and never came back. You will see a lot of different patterns in the market, but you can only see them when you spend time in the market and see the way they play out.
Okay.
Right?
Yeah, that's fine.
All right. Do you have any other question? Today it was easy. You can now go back and look at that week that we gave you, 12th July to 16th July on AUD USD. You'll notice that there were several opportunities there. One was a small loss, but the others gave quite some good returns. Are we all good? Collins, you have not said a word.
Oh, I've been listening. I think it has been good so far. But I'm learning, especially how you are moving those figures at the right, extreme right side. That's what I need to study more.
Yeah,
Yes, and by the way, you can do practice if you don't want to pay, let's say, and you're just practicing. There's a free version of TradingView that you don't have to pay, and you can do all those things that I've shown you. You can do all those things that I've shown you on that free version of the TradingView, including mimicking the buy position, sell position, and moving the stop loss, so that you start seeing the level of confidence that this strategy can give you, like how many percentage profit and so on and so forth. But all those things will come with your practicing. Yes, Vincent.
Yeah, the part that confused me a little bit is once you placed your order and you're moving your stop loss, I couldn't see what you're doing. You were explaining, but I couldn't see what you're doing. I probably need to. Maybe I was looking at my own things. And then also,
yeah,
when you, as the market is moving and you're taking the profit, your take profit line, how does that move as the market is moving and you're taking more profit until the next impulse sort of starts, or at the end of that particular impulse? I didn't see that quite clearly.
All right, so I think for that particular case, I'll just open one of the charts. I have several here, and then I'll explain to you. I'll actually use this week that we gave you, the 12th of July. Let me see if I can open that. Yes, so very good question, Vincent. So what happens, there's two types of ways of you securing your profit. Our background, and I am assuming that all of you are familiar with, we used to do scalping, where you would enter trades quickly and take profit. So you'll say, and in a CTrader, that is you can set it up like automatically. As long as you click, it already knows that 2 pips is my profit, but my stop loss, let's say, is 35 pips, right?
Yeah.
So that if it hits the 2 pips, you're out of that trade. But in case it goes against you, at 35 pips, it gets out of a trade. So in trading terms, you can set up 2 ways of you exiting a trade. So either it hits your profit or it hits your stop loss. So the example I was showing you here, and what we've been doing for this particular strategy, instead of setting a profit, we just move our stop loss. So you see, like in this particular example, when I started this trade, the stop loss is 14 pips, right?
Yeah.
But every time the market moves, instead of saying that I want to take the profit here because I don't know when this market will stop moving. Instead of saying that my profit is 2 pips or 3 pips or 10 pips, every time it moves to a good area where it forms a new impulse, instead of limiting myself and saying my profit will be here, I just move my stop loss. So what you're seeing me do was just adjusting my stop loss. Meaning, ordinarily, if your stop loss is less than negative 15 pips, for this particular strategy, literally it goes into the positive. I don't know whether you get the logic. In that, you have secured your profit, but using a stop loss. Are we together, Vincent?
Okay.
So meaning that I do not know how much profit this particular trade can give me, but in case the market goes against me, I don't want to go beyond here. So assume all this is your profit. Okay, let's use this. This was a very big trade. So every time it moves, assume that it keeps moving. If it forms a low here, I just adjust my. So what you're seeing me do is just to go to the settings of this tool. I'm just adjusting my stop loss. So right now is at 18 pips. So it moves down again, I adjust my stop loss, is 24 pips. Every time it moves, I adjust my stop loss again. So meaning if it comes back and takes me out, remember I did set my take profit is open field. I have not set it.
Yeah.
But I am securing my trade by every time I just adjust my stop loss. And if you're using MT4 or CTrader, you just normally right click on your order and then say modify, and then you just adjust the figures of your stop loss. So meaning if the market comes and changes, then you will exit that trade at a profit. It will not be a loss.
Yeah.
I don't know if I confused you or I answered your question.
Yeah, no, it's okay. Thanks. Yeah.
All right. We have 9 minutes, guys. So kipindi cha lala salama.
Just one question.
Yes.
Why would we do the stop loss manually when we can automate it by being a percentage of the price?
Yes, that's a very good question. So the reason why we are doing the stop loss manually, because we are price action traders. So we adjust our stop loss based on the way the market is moving. So we do not have the benefit of insight and know that this is how the market will go. But nothing stops you from saying that, for me, I only want to risk 1%. Actually, as a matter of fact, when we place the trade, and that's why I was saying my stop loss is 14 pips. So when we start, I say, I am putting this trade, but because I don't know how the market is going to go, I don't want to lose more than 14 pips. So when we start the trade, the only thing that we are sure of is the first time we're putting the trade. I say, I don't want to lose more than 14 pips. But after that, the market keeps moving up and down. I do not know how far the market will go. So that's why I keep adjusting it manually, depending on the pace at which the market is going. But it's also depending on what is called a trading plan. There are some people who say, I want to start here, but if this trade gives me 1% profit of my initial capital, I want to get out. Then that's still okay. It's still based on your preference. But for this particular, because we are swing traders, we want to maximize. And you see, we don't know if the trade itself will give us a 1% return or a 2% return or a 3% return. We might just exit prematurely if I say I'm going to exit at 1% and the trade ends up, giving a 10% return. So by manually adjusting the stop loss, I want to give it the maximum possible return it can give me. But because the market keeps moving and I don't have that knowledge beforehand, I will just, if the market moves up and I was buying, I'll just keep adjusting it until the time it will come and take me out. I don't know if that has answered your question.
Yes, it has. Though I was thinking in terms of trailing stop loss. The one that as the price goes, it adjusts itself by itself. It moves up.
Sorry, I was answering a call. I didn't quite get your question. Yes?
I was saying that I was referring to, I think it's called trailing stop loss, such that as the price goes up, the stop loss moves up by itself.
Yes, you can do that. But for us, we prefer this because we are in control. So basically,
Okay.
we want to be in control so that we are in control of the action we are taking based on what the market is doing.
All right, thanks.
Yes.
Sorry, Ken, if I may just interject on the same, because this also means then that you'll be there like having to do it real time for a long period of time, or what do you mean?
Yeah, this is not to scare you, Meshach. You'll not be watching literally like this. So what you can do is normally like what you do, like what professional traders do.
Yes.
With experience, you'll just know. It will always give you some telltale signs that now the market is about to give me a counter trend. So you set up alerts and you can even go and sleep. So if the alert goes off, you come back and check, oh, is it time to move my stop loss? So you'll not be spending every single second looking, but you'll use other tools to help you. Like, oh, now the alarm has gone off. Maybe it's time to check the way the market has behaved and now I move my stop loss. Okay.
But now the stop loss that you set, is there a situation where because now it's about to exceed that it just automatically like checks you out?
Yeah, we do not know how the market is behaved. So sometimes we'll just remember we moved our stop loss just 2 pips. If we were going down, we move it 2 pips above the previous high, right? The market may just come with a big wick and take you out, and that's it. You just move to the next trade, you know.
Okay.
Yeah, okay. We call it is what it is. So if it takes you out, you look for the next opportunity. And you know, it's almost like if you miss the bus, you just wait for the next bus.
Okay.
Yes. Any more questions? I think Coach has just come in. Coach, we are just winding up and we have 4 minutes. So probably if you can wind up with those 4 minutes as we close. But basically we have covered our class and we were just in a question and answer session.
Okay. All right. Well, good evening, guys. Sorry, today I was a bit tied up. Yeah, but I'm sure you had a good time. We've been discussing this with the team. We discuss this daily. Every single day we meet. We have meetings every day. So whatever you're getting from any of us is as good as me or anybody in the team. So I just want to say that we are actually happy and proud that we are raising an army of traders. You know, believe it or not, we believe that if we can learn it, which we did, that you can learn it too. You know, and we're going to hand you guys over to somebody who actually is making the millions. Oh, and by the way, I talked to him yesterday, and he confirmed that he wants to meet us, or rather meet you guys. So we've arranged that for the Monday class. For the Monday class, we'll be there. However, he will be like the quote-unquote keynote speaker. So we are excited about it. because he has many things to share. And then you can ask him some of these things you're asking us now. You can ask him, because we are not millionaire traders yet, but we are on the way. But we want you to have an opportunity to hear it from the cat's own mouth, and maybe even ask him some of those questions. Maybe they may not be necessarily trading related, but the journey, the journey he has had to go there, because he's made this money in about less than 2 years. So if you think about it, I'm not so sure he's any more special than any of you guys. I'm actually convinced, because I think I know most of you guys. I'm convinced that most of you guys are even way, way, way smarter than him. But look at it this way, he is already a millionaire, okay? Well, in Kenya, he's almost like a billionaire. So I'm almost convinced that even you guys will make it, for those of you who are diligent, if you don't give up. So thank you all for coming. Thank you for not giving up. Thank you for your believing in us, and we will not let you down. Okay, we will not let you down. We started a movement, and we believe that this is just the beginning. This is just the beginning, and you guys will be the pioneers of this new wave of we call it new money. You guys will be the new wave of new money from Forex trading, because you can do it. So if you guys were done, then I think we'll just call it a night. And please, please, please practice, practice, practice. There's no other way. There is no shortcut. This is not rocket science. It is not physics. It is not mathematics. It's all diligence. Sawa, any other questions before we shut down? Okay, if there's none, then we can just call it a night. And make sure you don't miss Monday's class. I think there's some videos I may have shared on the platform from Franklin. But yeah, he'll be live on Monday with us. So.
Okay. So tomorrow we have a class?